Hey folks, Siam here. Haven't done a market update for a while. Just thought I'd do. Well, I've just made a long one for the community, but I thought I'd share a little bit because it's just a bit of I think a low risk, high probability, short term play. So let's talk about it. Cool. So obviously we've seen Bitcoin have a best part of a 50% rally from the lows to where we are now. A lot of people think they're missing out on the boat. I still don't. I think this is a retail sucker punch, and the amount of jip I get in the comments, Twitter, and all sorts sort of help me. I think it reinforces that. So for example, like the last time I called a bunch of retail sucker punchers was this rally here. Everyone thought, oh no, it's a bottoming pattern, we're back to all-time highs, and I was like, nope. We then had this one over here, and again around here just before the midterms, everyone thought we were bottoming out. I mean, everyone thought that this was it. No. So normally with the bigger term picture, I'm pretty spot on actually, and I called back in December last year that we'd have a crash, or most of this year, and most of 2022, and we did. I'm just annoyed I didn't execute it as much as I should. Anywho, this, in my opinion, is another retail sucker punch. I think this is just fooling everyone into thinking, oh, all-time highs again. I don't see a scenario where this is back, full-on bull market. You need a much longer sort of bottoming out process. Also, don't even get me started on what's going on with, the dollar rate, the economy. Fundamentally, nothing's changed. So, just get rid of these. So I've got stuff stuck in my teeth. I've literally destroyed a whole co-op irresistible fruity flapjack cookies. I have no affiliate link. I just can't stop devouring these. I literally inhale boxes of these things. Anywho, where are we? Yeah, so I like liquidity. I tried playing around with Kingfisher for a
Trader Siam here.
Ignore that video. But I think high blocks just gives slightly better pictures in terms of liquidity levels. So looking at all the lick levels down here, you can see a lot of people along. You can see there's a lot of liquidation. So if you look at this scale, over $18 billion worth, all the way down sort of the 18.5 level. So, but where are we now? So if you look at this, if we try and zoom in, again, the UI in this is a bit pants. You have to play around with the scale and sort of expand it down here. No, down here. God damn it. Down here. There we go. Expand. So, what can we see from the lick levels around here? So, basically, all of the fun and games are around just above the 22,500 level. So, yeah. This is showing us a month worth of data. I don't know, are these daily charts? I'm not sure. But anyway, just looking at this, you can see all the fun and games around just above that 2200. And what you will generally find is that liquidation points tend to happen below stop losses. So if you look at this, below support and resistance. So compare this to the actual chart. It's just above the 2200 level. Well, no shit, Sherlock. Look, if you were to just draw a major support level right here, it's on that 2200. So, yeah, and again, a bunch of people probably would have done it, on these highs as well. So there's never, one thin line of support or resistance. It's normally a band or a big fat Mars bar sort of line, and that's where real support is. So I think the short-term play, looking at this, is that, yes, there's a lot of liquidity up here, but I think the short-term one is just to take out this level first. Yeah, so it's not a big move, but I just think we're most likely going to see falling down into sort of the 2200 level. Again, when you look at this, I mean, especially on the weekly chart, this needs a 50% pullback. Like, overextended candles or weeks or moves like this always retrace. So this move over here needs a 50% pullback or at least a 40% pullback down to sort of this 21 level. But ideally we'll probably see something at least down to here, which, yeah, I think that's it for now. Again, don't forget, pretty much every other crypto on the planet is running that gauntlet of, you know, being declared a security by the SEC. Bitcoin is the only one that sort of sails way above that. So eventually we're going to see a bit of a disconnect between Bitcoin and ETH, where you'll see Bitcoin looking a lot stronger than alts, and a lot of the alts potentially crumbling. So yeah, I'm still in cash. I'm still just waiting to get in with, you know, a proper low risk, high probability strategic play. Little teeny moves like this is not ideal for trading because, like, let's say you're going to short it here. Where are you going to put your stop loss? If you're going to, you know, if you're going to short, let's say here, which I wouldn't, you'd to have a safe stop. You want it above this high here, so you'd have a stop here. But then if your target is literally only here, it's a pretty shitty trade to place. In terms of risk reward, look at this. It's you're looking at a 0.3R trade, so nah. Although it is high probability, I just don't like the triple R, which is why I'm not trading it. Ideally, I want to wait for moves around here. Whether we'll get the lower lows around here again, I'm not too sure. Not for the moment, at least. So, I hope that makes sense. Yeah, chat soon. Bye.